Okay, so as always, let's start off with the indices. So let's take a look at NASDAQ to start. So right now, monthly, not really giving us any additional context, right? We're dealing with a scenario right now where the higher time frame draw I don't think is as cut and dry as, what I would normally like. That's not the end of the world, but what that's really suggesting is that every trade that I'm looking to take is going to be stemming from a lower time frame. For example, maybe a daily setup, a 4-hour setup, an hourly setup. And when that happens, to me, that just leads to lower probabilities, right? If you don't have all the time frames moving in confluence with one another, those are the highest possible, or probability setups that I think you're going to see. And if you don't have that higher time frame context, it's not the end of the world. It's still tradable. I just think that it's the probability is a little less, and because of that, I tend to be a little bit tighter with my stop losses and all of that. And now this doesn't happen all the time. This tends to happen when we don't meet the Mando model or the odd NAM criteria from a higher time frame perspective. That's all, right? So for the Mando model, I would need a discounted bullish imbalance to be tagged. For a odd NAM, I would need an imbalance to the downside to suggest us retracing to 50%. That's the two models that I use. With if it doesn't really meet those, that criteria, then it's going to be smaller time frame. It's just going to be a little lower probability. That's all. So as we go down into the weekly, again, not really much doing here. We are holding on to that previous bullish volume imbalance yet again. And we do have a volume imbalance, which gets us up to 26,004. That also leads you into your daily showtime, which I think ultimately is the draw on liquidity. I do believe that we're ultimately going to get to this point. Now, what's it going to take for us to get into that point? That's the question, okay? We still really haven't shown any urgency out of this bullish level just yet. There's no chance of a bullish fair value gap to form today with the way that we closed with the wicks. So really, the rule of thumb for me is if we're not forming any imbalances, and that goes for either up or down, to me, that's chop, right? If I see this, let's just say this is the setup on like a 5 or a 15-minute time frame, like I'm anticipating chop. We need to see some sort of urgency to the upside or the downside in order for me to really be interested in doing anything at this point. Now, of course, you can go down into smaller time frames and see if maybe, we can catch that turn or catch that urgency before it's happening. Is there anything really suggesting that we are going to make some sort of move? And where it really needs to happen, in my opinion, is now, right? We, from a 4-hour perspective or even an hourly perspective, we are right inside of our final bearish level. Okay. By being inside this final bearish level, if we can mitigate this, I don't see why we wouldn't run up into that daily showtime level, right? This is really the last thing that's standing in the way. And I will say that NASDAQ really does not look nearly as good as what you see on the S&P right now, or even YM, right? Much more clear cut, right? Check this. There's your bullish level. Look at the tag. This is from a 4-hour perspective, of course. And then let's zoom out really quickly from your low up to your high. And, we got a discount imbalance. We bounced nicely. And you are actually in the process of creating a 4-hour breaker. Now, this is massive from a 4-hour perspective. When we go to the hourly, this is going to look much prettier. Okay, so this is really what we're working on right now. In terms of indices, again, a little bit more of a waiting game as we await some sort of urgency at this point. We actually have back-to-back breakers here, so here and there. And then we have data to close out the week. Tomorrow, I do not believe that we have any, but we do have data coming on Wednesday with our non-farm employment change. Thursday, I know we have data as well. And then Friday, we have our non-farm payroll. So yeah, I'm really just kind of waiting for some sort of urgency. I don't think that this is a bad place for us to put our foot in the ground and start moving higher and go to ultimately chase our daily draw on liquidity. But again, we're still kind of awaiting that level of urgency, which we really just don't have at this time. So that's kind of what I'm waiting on. I do think that it has a good potential to come where we currently stand, but I don't think it's really coming from NASDAQ. Like, I don't really, like, this is not really a good setup on NASDAQ, but if you flip this over and you go look at The S&P, it looks much better. So just a lot of divergence. That's what I think is leading to this smaller time frame price action being pretty bad. So that's just a little breakdown on the indices to start. Does anybody have any questions about anything we just went over there? We'll go. Any thoughts on where the indices and both Bitcoin are both at the moment? Um, so yeah, I mean, I can give you a couple pivots on the indices that I think are important. I don't know if it's indices, indexes, whatever it is. I've always said indices. I don't know if that's the right way to say it or not, but it is what it is. But yeah, no. So I think again, I really don't think Nasdaq is the leader at this point. I don't really, value Nasdaq nearly as much as I do the S&P, and I think the S&P looks way better. Um, Now, with that being said, I do think that there's pivots, right? And we talked about this last night as well. I think this is an important spot, right? Bouncing out of this discounted bullish daily imbalance. I think, expectations would be for us to go get 6,994 and then up to 7,011. I think that is fair. I think that makes a lot of sense. Um, but also beyond that, that's just kind of pivot number one, where we currently are inside of this daily. The next one, and this is to me the biggest and most important one, because you've noticed that we really haven't formed too many bearish levels, and we haven't really been respecting bearish order flow nearly as much since we left this untouched. Okay? That's leading me to believe that this is likely going to get tagged. And I got to be honest, from this point, I have my opinions on this, but I will say when we get into these showtime imbalances, which are the last imbalance prior to going to reach for that, whatever it is, the market structure shift or even the new high, whatever it might be, I am hands off there. And the reason I say that is just because um, I feel as though my edge isn't quite as sharp when we get into these showtime imbalances. The reason for that is because we also have SMT divergence across the board, right? You would have Dow taking out a new high, which it did today. You would have the S&P taking out a new high, and then you would have Nasdaq getting into its final bearish level. As you probably already know, when we take liquidity, that is a very valid place for price to take the liquidity and then ultimately retrace. And now you pair that with what you see on Nasdaq, that final imbalance, that kind of lines up to be a pretty good place for if there were to be some sort of retracement for it to occur at that point. So that's really, I don't feel as though I have this like amazing edge. I don't want to front run a break through that level because to me that's kind of silly. Why not just allow it to take out that imbalance and then I can ride it to the next high? I'm essentially would, sideline for what, like 130 points, which is fine. But knowing that we get above that level, then to me, it's the expectation is 400 more points to the upside. That's fine by me. But I don't want to be trying to front run anything really ever. That's not any part of any of the models that I do. I don't like to front run. I like to allow price to kind of dictate my next move, right? And of course we can anticipate. Anticipation is everything to me. My take is if you see someone saying that you need to be able to react, I think uh, that's probably a bad trader. I think that's probably somebody who doesn't understand the concept of liquidity. But when we talk about anticipation, that is to me the difference maker. And the difference for me between anticipation and trying to front run is with anticipation, there are certain things that there are certain criteria that need to be met. Giving market structure, where's the draw on liquidity, what is our buy side target from a higher time frame perspective, did we get into a discounted level, right? All of those things are helping us anticipate. But when we get to, or I should say, the difference between that and what I would deem front running is basically trying to trade it into a pivot and hoping you're going to be correct, essentially, because we don't really have those additional context clues at this point. Whereas you've seen the Mando model complete 50 million times, you're going to feel much more comfortable anticipating that move and being a part of that run through that high. Whereas you getting into the final imbalance inside of a previous price run, you're kind of rolling the dice a little bit, right? And I don't like doing that. So that's really the difference that I have between anticipating and front running. I think front running is definitely like a negative connotation and anticipation is a positive. You need to be able to anticipate, but the difference here is anticipating into a showtime imbalance. I don't think you have the available information to make that like next level convicted type of play out of, because where's your edge? Do you really have an edge at that point? I don't think so. So that's just indices. And again, like the second part of the question really was like, okay, if those are your two pivots right now, like what's the deal with Bitcoin? And Bitcoin is very similar, believe it or not, and it's kind of funny how Bitcoin is starting to align just a little bit better with the indices, because we are approaching a weekly bearish fair value gap here on Bitcoin. That's at 95,938. You're also approaching that showtime bearish imbalance, which gets you at 94,652. So even more specifically is that weekly imbalance here. Now here, again, this is my showtime pivot, right? If we're going to reject, I am as close to positive as I'll ever be that it's coming from that imbalance here and here, okay? Now, if you essentially disregard this, which you could justify us getting through this showtime imbalance. I don't personally think it's favorable. I hope I'm wrong. I hope we get through it because I have Bitcoin. But I got to be honest, if it's going to reject, it is likely going to happen here. And the reason for that, simply put, is this is our last imbalance. If you get over this imbalance, I think Bitcoin can go like nutty. There's no more bearish imbalances left, right? So, we are in the process of creating a bullish weekly imbalance. I think that would be huge. That is the urgency that I've been talking about since the end of November at this point, right? We were just waiting on some sort of urgency, and it just wasn't presenting itself. Now it's starting to present itself, which is great. But that level right here on the weekly and the monthly, this to me is dictating Q1 at the very least. Like that's my point of view on this. And the same would apply for indices, right? How do we react to that showtime level? That to me is going to dictate at least the next month. A little bit different on indices than what you would have on Bitcoin. Bitcoin has still got a long way to go to get to that all-time high. So those are just some thoughts on indices, Bitcoin. I think both in very, very important spots. So before we get into some of these individual names, let's just go through the price action from today. I'll pull up a blank chart. We'll go through because I personally, again, I've been away last week, and it always happens like this. When I'm away for a week, I come back and and it's not that I'm not looking at like higher time frame charts when I'm away, because I do, but when I get back into like the smaller time frame stuff, like I kind of have to like recalibrate a little bit. And it's not so much like reading price, it's just like understanding like the time it actually takes for sometimes these moves to take place, and that is can be a little difficult sometimes to recalibrate to. And honestly, today I think the second move of the day I was pretty rock solid on, but I was not nearly as comfortable, and I didn't think the price delivery was really that good either. So so let's just look going into today. Of course, we knew that we were heading into that pretty important pivot, right? We had that daily imbalance on both NASDAQ and the S&P. We gapped up into it. Great, right? So from a 5-minute perspective, into that high that we set right around lunchtime. Let me just mark this up. Okay. So again, showtime imbalance. Okay, here's just another example of it, and this time just from a smaller time frame. So look at the initial run and this run, and just to show you where the rejection came from, right? Bearish level here, price got in, price rejected. I just want to remove that just for optics. But here's what you're working with, okay? And this is this really starts dating back to Friday, okay? So Friday, obviously, nuke, price got into a bearish level here, rejects, goes lower, and then we ultimately get into that daily level. Remember, that is an important pivot, okay? Now, from a 5-minute perspective, right, nothing is going to change in terms of the overall delivery or how we would even approach this from our model's perspective, right? That's our bearish price run. Why is this our bearish price run? because even when we did bounce here, we did not get 50% of the range. If we don't get 50% of the range, all that's suggesting is that our range is not set. That's all, right? No problem. Price ultimately gravitates lower. Again, no problem. We get into that higher time frame daily objective, right? I'm going to go over to the daily real quick and just mark it out so you guys see where, the bounce came from. Because again, these bounces and all that, it's not random. Okay, nothing here is random. So I don't know why I have these that little writing on here. Whoops. And I have this. Hold on. I'm just gonna. I don't want to do that. Damn it. All right, I gotta. Sorry. Let me just exit out all this shit. Okay. This is me. I have these PDF files. I've been making them just on the models and like a step-by-step approach to them. But here, let me zoom back in. Okay. So here. All right. There is your daily imbalance. Just so you see, and now we'll go back over to the 5 and see where obviously we caught. Beauty. Okay. Very, very close to completely disrupting that. But remember, I'm just going to go to the daily for this, right? Where does this go wrong? Where does this daily imbalance fail? The low of the candle that created the imbalance. Okay, so if you go into the trade understanding that the low of the candle that created the imbalance is what your stop loss is going to be, guess what? That low wick, no problem, right? That's not going to stop you out because your stop loss is here. And if that is too big of a wick down, then it's not a trade that you want to take. That's all. And that's all predetermined. You could do that before you even enter the trade, right? But as you continue, let's go back over here to the smaller time frame. So now from this point, we got into that higher time frame level. Great, okay? At this point, what we're awaiting is the formation of our first imbalance off those lows. That would suggest that we are going to make an odd NAM move, right? One of the models that we talk about in here, which is the odd NAM model, where you form an imbalance. At that point, when you form that imbalance, preferably from a higher time frame, but when you form that higher time frame imbalance, you will ultimately gravitate towards 50% of the range at the very least. Okay, so here, and we can go to a higher time frame if you guys want to do that. That's fine. Whoops. 15, maybe even an hourly you can look towards, right? Here, whoops. What the hell's going on here? Here it is. Okay, this is the run in question, right? So you get your 15-minute first imbalance. Okay, the first imbalance forms. Great. You shift even smaller time frame market structure here. Okay, so you have your first imbalance. Great. That's going to imply 50% of the range, which is 534. From that point, you can even look at it from this perspective, which we actually missed. But low, high, you get into that imbalance here. This is also a bullish breaker. Low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. So here is price getting into your bullish breaker. There's your run through highs to complete the model. So now from this point, the expectation is ultimately that we will go see 50% at the very least, okay? If there's no imbalance at 50%, then there's nothing really implying a rejection from that point, right? This is a bearish order block. This is not something that I would be looking short off of by any means. I want to see an imbalance, right? At an imbalance, that's when I'll start to be hands off. I'll be looking to take profit. But from this point, price gets to 50%, then it retraces into discount of that most recent run, gets into a bullish imbalance here. From that bullish imbalance, we start to keep climbing. Now from here, yet again, you have another bullish imbalance. Price gravitates into that bullish imbalance and yet again runs for highs. So just based on this right here, this is actually pretty useful. Now think about it. Let's just say we form this imbalance and we don't immediately get into it, right? This is just something that you can see throughout your back testing that odds are price is going to come back down into a bullish imbalance, right? You never really want to add off of air, right? Because think about it. You might have been correct in terms of your overall bias for price to go chase higher, to go get into that showtime final bearish imbalance inside this bearish price run. But you might have bought it here. And guess what? This retracement back into the bullish level where you really should be adding, that might stop you out, right? So you get stopped out before the move because your entry is poor, because you're not adding off of an imbalance, you're adding off of air. That's what you really want to avoid. There's been way too many times when I was first kind of getting into this whole methodology here that I would be like, screw it, I know price is going here, I'm going to buy it here, it doesn't matter. But you start to really second guess yourself when you buy it outside of an imbalance and then you go chase the imbalance and you're like, fuck, man, do I stop out here? If this fails, I'm really in deep shit, because now not only was my entry far off from where I really should have been, but now I'm underwater a couple points. You know, I don't want, and you don't want to be obviously starting or fighting back just to get break even. That sucks. You want to fight to win, not just get back to where you were originally, you know? But from this point, obviously, we get the continuation. Price gets into another imbalance here and runs higher. And this is really the move from today. Very, very, very sloppy on this move with these low wicks. And really, it took you about 45 minutes to put its foot in the ground before making its move higher. Now, you have something that I think is actually pretty fitting, I guess you could say. But from this point, there is something that we talk about in here, and, it doesn't always come up, but this would just be an instance of that, where you have drive number 1, drive number 2, and drive number 3. 3 drives pattern. When you see the 3 drives pattern, typically that's going to lead to a pretty big retracement, especially when that overlaps with a higher time frame bearish level. Price got into that bearish showtime level. Again, that is the kind of the theme of this call so far. That final imbalance at showtime level. Price wicks the imbalance and ultimately starts to reject. Now, I was on the ball with this play where you had that first imbalance form to the downside, which is great. And, obviously we got back into it. Price got in and price rejects lower. What the big takeaway for me from this point was, not only did we form this imbalance, obviously price got in and we respected. If you look left, we really didn't form any bullish imbalances all day. So what that's really telling me is that ultimately there's not much to hold us up here, okay? Like, we're probably going to slice this pretty cleanly, which ultimately we did. We gravitated lower, and, we did leave behind even more bad lows, and that's really, I'm not really loving these lows, just to be fair. I think we have a lot of bad lows. But you flip this over and you look at it from an ES perspective. Again, very similarly, you don't really have too many bullish levels to, look for the bounce to come from. A little bit better than what you have on NASDAQ. At least here you have a volume imbalance, which is great, but otherwise really not that great. But yeah, so I mean that's really today's breakdown. I was not very good. There was really like 2 moves to be had, I guess, really, right? You had where is it? Whoops. You had this first move, which was extremely, extremely sloppy, where you got into that bullish imbalance and ultimately ran higher. I think if you were looking at ES instead of NASDAQ, this would have been much cleaner. You probably would have had a better indication that we were going to move higher from this point. And then I think this was a great play. And even if you didn't necessarily catch that final 5-minute showtime imbalance, even the imbalance here, I think that was your second opportunity to get it, because this turned out to be really, really a nice play. This is from 675 down to a low of 558. It's over 100 points. One NQ contract with 100 points, that's $2,000. So, and it really didn't even get into the final objective, I don't think. You got some relative equal lows. Maybe you had SMT at some point down here. Yeah, you did. You had ES take those lows while NASDAQ didn't, right? So you do have SMT with ES off the lows. But so that's today's price action. Not the greatest ever, but it is what it is. Now, let's take a look at some of these individual names that you guys brought up here. I'll probably do a lot more of these tomorrow when we're on live trading, at least a lot of the names that I want to look at. Let's see. So yeah, let's do that Zeta one. So Zeta was it was really it came on towards the end of last year. A few people in the group were talking about it. Yearly doesn't really offer too much, it's not the end of the world. It's fine. Your quarterly looks great on Zeta. It looks like this is going to go to 38.20 eventually. Now, of course, this is a quarterly setup. This could take a lot of time, okay, just to be fair. But Good start, 8% on the day. Got into a bullish volume imbalance, respected it nicely thus far. I know we're only 4 days in, but yeah, relative equal highs at the very least up to complete that daily Mando model at 22.19. Here's your monthly. Whoops. And if you're new here and you're like, what the fuck is he talking about? Just check out the beginner's guide and keep joining lives. I promise you, you're going to become much more familiar with this. Like everybody else in here kind of understands the terminology at this point. It just takes a little time, that's all. Here's a great example of a breaker. Low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. Bing, bing, bing. Here's a bullish imbalance as well. Double layers of confluence. This is as close as an A plus setup as you're going to get. It's probably like in between an A plus and an A. The only thing that would make this setup better is that if we had like a sell side in here, like a little internal range low that we swept as well with the breaker and the imbalance. But it's pretty freaking good. You had a mitigation block here too. You had a lot going on for this one. This one, I think this one looks great. It's just the timeline for how long it's going to take. How long is this going to fucking take? Yeah, Zeta definitely a clean chart. How long is this going to take to ultimately gravitate here? But that's the thing. If you feel as though from a higher time frame perspective you have the correct draw on liquidity, the good thing about that is even if you don't want to say, all right, I'm going to get 38 calls for 6 months out, because I don't know how long it's going to take. What you can do still is you can go down into smaller time frames and look for bullish setups to take place on this name, knowing that your higher time frame draw on liquidity is higher. That's the real cheat code. So, but yeah, Zeta looks good, man. Looks good on the monthly, weekly as well. Let's see. Excellent. Yeah, 22.19 completes the weekly Mando model there. You have one more bearish imbalance. This is a volume imbalance at 23.49. Excellent. Now, I don't really think these bearish levels are going to be like the rejector to send us through lows or anything, but they could definitely become speed bumps. So just take that into consideration. But look at that daily. So beautiful. Perfect. Yeah, honestly, like this chart, when it eventually completes, like hang this in the freaking, hang it in the rafters. That's a beauty. So, yeah, I just think it's going to take time. That's all. And, the worst part about trading, in my opinion, even worse than just being flat out wrong, is being right in terms of the direction and not like acquiring enough time on a trade to let it actually play out. Like, that sucks. But this one looks good. So not everything looks like shit. Kava has been electric. Indeed. So yearly is not showing you much. It's fine. It's a relatively new company. Yeah, the quarterly looks good too, kind of like Zeta. The only difference is that you are going to get into a quarterly imbalance here. I think the highest conviction from me would come above this. You get above that level, I don't see why you don't go to 101, and then from 101 you might reject, retrace, and then go. But this one long term as well looks pretty good. What is it called, Kava? Oh yeah, low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. Price gets into a bullish imbalance as well. Pretty freaking good. So yeah, you got to beat this level. This is the big one coming up though. Yes, the volume imbalance, but even this monthly imbalance there, that would align. It doesn't quite align with the quarterly. Like, you could still be above the quarterly. That could just be the wick. So you just got to keep that in mind. And even from that point, let's just say we get into here and we do retrace. You retrace into something like this. This is just, to me, another opportunity. I do think the lows are in. Doesn't mean that 63 is the lowest that we're going to go. We could go and see this monthly imbalance when it forms, but somewhere down the line. So, but that's Kava. Hymns, okay. HIMS has a breaker. Low, high, lower, low. Break up and through. We would anticipate the high of that sequence to act as a support level moving forward. It is quite lower than where we are right now. I think this would be the area with the most confluence, like 23 bucks. Now, I don't know exactly how that aligns with the other time frames, but we're going to find out. So, um, I would not be opposed to getting a HIMS like inside a yearly imbalance like this. It's going to take forever because it's a yearly, but using this area as an area of accumulation. Remember, this is also going to be discounted as well inside that most recent run. So this does have a lot going for it. But again, really, from a yearly at least, there's nothing implying that it needs to go there just yet. Let's see. Um, yeah, so from the quarterly, I think this one might actually take a little bit more time than we think. Because if on the quarterly you form a quarterly bearish imbalance, then I would anticipate the next quarter getting in and then getting out and then ultimately gravitating down towards here. If you erase this quarterly right off the bat, I mean, again, like I said, there's really nothing implying that you have to go down just yet, at least from the quarterly and the yearly. Let's see. But again, for me personally, I'm not interested in this one unless we get into this, just to be fair, because I don't like buying stuff that's above a draw on liquidity. That's all. Um, yeah, I think this is okay. Lines up decent from a monthly perspective as well. Now, you do have a monthly imbalance. That's at like 40 bucks. So just because I'm saying I think I would prefer it here first, that doesn't mean that we can't go up another 10, 15 bucks first, right? I'm looking at this from a large scale and then breaking it into a smaller scale. This is the hard thing about like kind of getting a message out because, you could tweet something about, I think HIMS is going to 23 bucks. Well, I also think it can go up $15 first and then go down to 23 bucks. So, like, that's kind of the way I try and preface it that way and just make the most sense of it. I think you can get like a move into there and then ultimately retrace. I think that would be the money shot for me personally. If you get into here and you mitigate this, can you justify it? Yeah, you can, but I don't like it nearly as much. There is a monthly volume imbalance there, so you can justify it. I don't favor that at all, but again, to be fair, you can justify a move higher from this point. Just not one that I would really prefer. I think that yearly would be so much better. So that is HIMS. Ava, okay. I'm 99% sure. Now I'm 100% sure. This one had a split, so I don't really know in terms of like this range is just not a true range. Anytime you get a split like that, to me it's not real. Price was never $109 on Ava ever. So that throws us for a loop. That doesn't mean that the setup can't be good though. That's uh, to be fair. Now remember, we have a quarterly bearish imbalance here. And I can't use the range because we split. So at this point, we're totally sandwiched. And when we're sandwiched like this with no clear higher time frame draw on liquidity, I'm not interested. I think it would make a lot of sense to go back here, but with the split, I have little to no confidence in this, just to be fair. So yearly breaker plus, yeah, that's on HIMS. Yep. Okay, let's run through a few more. On. Yeah, I think On looks pretty good, believe it or not. This semiconductor name got into a yearly bullish imbalance. So far, so good. Nice wick out of that yearly. And then no bearish imbalances overhead. That's great. Quarterly, also pretty good. Got into the quarterly imbalance. So far, so good. We are making our way through this. Mitigating this, that to me is super bullish. Because there's no bearish imbalance left until 85 bucks. So at the very least, that's $30 from where we are right now. It's got to get through this. I think it personally will, but again, it's a little bit of a front run by me even saying that. Now from the monthly, it looks even better. So low, high, discount retracement, bullish imbalance inside of a larger Mando model taking place, right? Low, high, discount. I think this one looks pretty good. Yeah. We are front running a little bit just because we do have that quarterly imbalance, but the monthly looks fuego. Yeah, I like this one too. I remember I liked this one a while ago, just to be fair. I remember, I think OJ brought this one up a while ago. MP. Just takes time. The higher time frame setup, that's all. Okay, so MP completed the model last year and has the chance at creating a bullish imbalance here on your yearly time frame. Okay, obviously that's far out. That could take a lot of time, but just to be fair, that is what we're working with right now. Now, with your quarterly, you have a quarterly imbalance. So for me, I would much rather be a buyer inside of a quarterly imbalance than off of air. So, you know, can we go in here? That would be awesome. It's about $9 lower. It actually looks decent right now, and it's starting off the month pretty strong, so I'm not so sure that's going to happen. And also, at the same time, as much as I want this to go into the quarterly, you can totally justify this going higher without going into the quarterly, and here's why. You're in discount of a bullish range. You got into a bullish imbalance. You got into a bullish breaker. You swept liquidity in the opposing direction of your overarching trend. If you close this month up, you close this over this level here, the open of December's monthly candle, you create a bullish order block. At that point, I don't see why we wouldn't go higher with leaving that quarterly opened. So, not really something that I want, but it does look good. I would prefer it. I would say it looks great if it were $9 lower. That's all. NBIS, so NBIS, very similar situation, has the potential of creating a yearly imbalance, which is great. I think I posted something on this one last month. Yeah, this one looks really good, actually. So you created a quarterly imbalance, and you created, or you got into a quarterly breaker. This is the same scenario which we just mentioned with MP. I would love it here. Does it have to go there? I don't think so. I don't know. I might not get an opportunity at this, but that would be where I would want it, you know. So that to me is the money shot. That's where you have the bullish breaker and the quarterly bullish imbalance. You know, I think the jury is still out in terms of just overall market retracement too. Like if we do see an overall market retracement, I think it would make a lot of sense for a lot of these names to retrace and get into that level. But yeah, I think that's the best spot for MBIS. Yeah, it just missed my my alert on this one. Yeah, because yep, this is last month. Yeah, just missed it. That would really suck if I didn't get it, but it's okay. This one looks good though. Looks good. You know, sometimes I'm just a little stingy. That's all. I would much rather be miss something than just be a little too early. That's all. You know, I can have the right analysis in terms of where it's going. The problem is, especially with these higher time frame setups, I already have a lot of individual names. I'm not really looking to add too many more until some more of these complete. So, you know, but this to me, I would be looking using a bullish bias until it price shows that it's going to reject from some bearish order flow. That's all, you know. So like let's and I'll give you an example of that. So like let's just say for example on MBIS, you know, for example, you get into, I don't know, where's a bearish level? Let's say you get into this bearish volume imbalance again and you reject it, right? At that point, I would say, all right, maybe the draw is actually lower on something like this, right? I do think this high is going to get swept at 95.87. But if we reject from that point, that to me is implying that we're respecting bearish order flow and we do have a draw lower. I think that would be a pretty decent spot. Do we see this first, 105, reject 105, and then ultimately gravitate lower? That's a possibility. I don't know how much I favor that, but I think at least for the short term, I do think that we are going to go a little higher on this. But AMD really wanted to take the 4-hour relative equal highs before dumping. She might have left without me getting divorced. Coupons. Okay, let's see. AMD, I already know, already completed the model last year, so on the higher time frames. Weekly sweep got into a bearish level. There's a lot of relative equal lows on AMD. That gets you like 194. I think having a bearish bias at this point is definitely more than fair. But I think, yeah, we are inside of a breaker, which throws it for a little loop, right? Low, high, lower, low, break up and through. That throws me for a little bit of a loop, but I think if there is going to be some sort of larger scale retracement, I do think that this is a reasonable spot for it to happen. I think it's the only spot for it to happen, really. So I think that's fair. Let's see. I mean, I don't know. You want 4-hour relative equal highs? Ah, geez. Hold up. You want 267? Or you want this high, 237? I think it's a pretty good spot for a rejection. So let's see, right? This is a good example of what we just talked about. We're rejecting a 4-hour level after sweeping liquidity, okay? So Stonks had the right idea. All right, I think this is an area that we could retrace. You pair that with what you see on the weekly time frame, now it makes a lot of sense that we could actually retrace for a prolonged period of time, right? Now, it's just a matter of, are we going to respect bullish order flow or not, right? What does that mean? If we get into this level and then we start to go higher and actually mitigate this bearish level, then you know, okay, we're actually bullish. The bearish idea is fucked, right? That's as simple as it's going to be. But if you get into this bullish level, bounce it into this newly formed bearish 4-hour, and we reject from that point, now you know you're onto something. I think you would have quite range to the downside. So I might even, I honestly, I think this is a pretty good idea from Stonks. I'm thinking about just leaving an alert here, and we'll see. What would make me want to trade this would be bounce here into here, hold this, reject lower. I think it's pretty fair in terms of like the risk reward too. What would make me not want to trade it from this point would be if we go straight into this, then reject lower, because look, that's a sick move. It's decent, 223 to like 219, so it's like $4. Like that to me is a scalp. But from this level, you could bounce it again and go take buy side and then dump it again or whatever. But that would be kind of the path for me. I would want it to do that. Hold on, quick phone check break. Give me a sec. Okay. Good. All right, let's see. Smart move. If I'm ever trading indices, I have both NQ next to ES. Yeah, that's definitely a good move for sure. Oh shit, we got a lot of fucking names. I think the Kava split was a good split, by the way. Meaning that the big number was first. Good companies do those splits. Riley has relative equal lows on the yearly, and it has a yearly fair value gap approaching. I wouldn't be surprised if it gets 790 and then dumps out of there. Let's see. Yeah, I'm not really a big fan of this one because it has a yearly bearish fair value gap and it also has a quarterly bearish fair value gap. So yeah, I don't really like that one. Cores, and we didn't form any imbalance up either. Cores, still relatively new in terms of how long this company's been around for. Yearly's not showing you much. Quarterly's not showing you much. There's actually 0 imbalances on the quarterly. Monthly is okay. I would prefer it here just to sweep these relative equal lows. So kind of see how the monthly closes. If the monthly can close above this bearish volume imbalance, I think you're in pretty good shape. But and we are discounted, so I wouldn't necessarily want to short this, but I think this would be more favorable for longs, just knowing that you sweep liquidity into a discounted bullish imbalance. That would make a lot more sense to me. Bit F. Let's see. Bit F, another one, not really too much data, and even like the levels that form, not really all that great. No imbalances. BitF, a lot of fucking names did this, man. They created quarterly imbalances and then started to move before getting into them. I think that's kind of sus. This has happened many, many times here. So, preferably we would get this, honestly, and then from there I do think that we go higher. There's relative equal highs all the way up to all-time highs on this name. And I do expect Bitcoin to perform pretty well at the end of the day. Like at the end of this year, I would say that we probably do pretty well. I'm just a little suspect about that 70 higher time frame retracement that you could possibly see. But yeah, it's just sus it left that 224 behind. And I don't like buying unless I'm inside of an imbalance. So path. Path is a little tricky. I love this one now. I don't really love it that much. We did complete the smaller time frame Mando model, but we're inside of a fat quarterly right now. And we didn't form any quarterly up. The monthly caught, that was good. We don't have any imbalances in discount of this range, and we're sitting right at 50% of the previous range. There is a breaker here. So here's the way I would put this. Like, monthly setup, actually decent. It's not great, and it's not great because we don't have any discounted imbalances, but you have the breaker. I would say that it's also not great because you don't really have any higher time frame like imbalance to the upside, so nothing's really showing you urgency to move higher just yet. So, I mean, I think the monthly, like if you just looked at this monthly blank and didn't have to take into consideration any other higher time frame, I think it's fine. It's okay. I wish there was an imbalance here. I'd feel much better about it, but that's path. AES, the yearly imbalance implies an odd name never completed at 59 cents. Uh-oh. Penny stock. Yikes. Let's see. Hey. 59 cents. Huh? So you shifted all-time structure here. You did not complete an odd name. You were correct about that. There is a yearly bearish imbalance in premium of that range. Yeah, if you look left, though, rejecting out of this bearish imbalance is tough because you actually really don't have anything to your left, and you have a ton of relative equal lows. So I'm not really a fan of this one. Higher time frame level, giving it the beat down. Let's see, maybe if there's smaller time frame stuff. This would be the pivot. Here's your showtime level. You get through this, I think you're actually in business to complete an odd nam. If you reject this, I think you're cooked. I think you're going to go through the relative equal lows and probably end up somewhere in this vicinity. Delisted. I don't know. Zeta is very clean. RCAT. Jeez, there's so many. Fuck. Alright, it's alright. We'll do them. RCAT looks okay. Again, another one. Created an imbalance. Didn't get into it, which sucks ass. Especially if you have a model and you trade off of a model specifically and solely. Yeah, this one sucks as well here. Really, really nice move. But relative equal lows to get you into this imbalance. That really stinks. And it's split. This one might be graduating, though, because or it did graduate already. That was a split in 2019. We actually took that high. So this is like a real company. But we got discounted. Didn't get into the bullish imbalance and then ran through highs to complete. So this one's tough. Again, another one. Maybe trading it short term is fine. I'm looking at it from a higher time frame perspective. This would be the spot for me. That's all. Again, you can look at it from the smaller time frame. It looks like right now the draw is going to be higher. So let's see from a weekly. Are you going to run into any trouble here soon? You are. Candle close, candle open. That is a bearish volume imbalance that you're about to run into on the weekly. And then you have a weekly bearish fair value gap. So it doesn't look as smooth. There's a couple places that it could run into. It did catch a bullish volume imbalance here. So short term, I do think it's going to go a little higher. That's the difference between analyzing something from like a higher time frame or a lower time frame. The higher time frame is just a little bit more sus to me because of those relative equal lows. But it's tough. I think it's going to go in here from here. We'll see. But weekly so far, really strong. On right idea, didn't buy enough time. Yep, sucks, doesn't it? Yeah. What would make it an A plus? So I have that in the additional resource if you want to see the like actual like depiction of it. But basically, for like an A plus setup, you want the higher time frame context, of course, and then it would be like a Mando model or an odd NAM, but it has layers to it. So not only do you have the discounted imbalance or the first imbalance that forms in the opposing direction of the trend, you'd also have a breaker with that imbalance, and also you would have a turtle soup opportunity inside of that as well. Like that to me is the best setup that you're going to get. So like for example, let's just say RCAT, I think it did actually. Yeah, it did. So it had a breaker here, right? Low, high, lower low, break up and through. Here's your bullish imbalance. Here's your breaker. If we turtle soup this low, that's literally A plus. Like I always go back to this one. I'll show you. This is the best. It happens quite a bit on higher time frames, but this to me is the best setup you're ever going to get. Breaker, bullish imbalance, and turtle soup, sweeping liquidity. If you get that, to me, there's nothing better. I will take that setup 10 times out of 10. All right. SMR. SMR has a breaker here on the yearly. So far, so good. Let's see. Okay, it has a bullish volume imbalance. Not the most ideal, but breaker. You would need some fireworks this quarter. It's a great start. It was 15% today. That's awesome. If you can get up to 30.62 within this quarter, I think you're in some business. Otherwise, I think you're cooked because you're going to form a quarterly, and then you get into the quarterly. I'd expect it to reject from there without any imbalances here. So that's important in my opinion. A big quarter. You need a big quarter out of this one. Now, just because of time purposes, you could go and look at smaller time frames and see if there is anything that would imply this to continue to move to that 30.62. But ENVX, I need this one to go. Yearly, not really showing you anything. Quarterly, not really showing you anything. It is 3 drives lower, which is good. Okay, and you might say, well, isn't this like a 4th drive? Yes, but we didn't quite retrace into discount following this low here. Um, so that's why it kind of still falls into that category of the 3 drives, right? You would still want like a full retracement off of that. So the quarterly, it's not much showing you anything there. The monthly is okay. Well, the monthly, what you got to do, it has to happen. You have to mitigate this. You have to mitigate that level. Because in reality, I guess it's technically fine still. It still plays, but it's got to happen. It's got to happen this month. If we don't get above 986, I'm not as optimistic as I should be on this. So that has to happen. Did Kava just split? I think it was a good split. If it split at all, I'm not sure. Let's see. I think it did. No, maybe it didn't. No. Yeah, I think you're maybe thinking of something else. Chipotle just split. You Amy. Yeah, you Amy. Somebody brought it up in one of my streams last year, and it looked good. Okay, so it did make a yearly imbalance, which is great. That's at 436. Let's see. Let's see if it has to get there. Yeah, this looks pretty good. Monthly. This is gold, I believe, right? Gold mining. I could be wrong, but yeah, this looks pretty good. I don't know. I don't think this one ever split either. When I first met KD, he loved this name so much. This was like 4 or 5 years, maybe. Well, actually, yeah, closer to 6 years now. Holy shit. But yeah, he loved you, Amy. I remember he had it in like the pennies, and this thing went berserk. Thinking we close the weekly, we should get the daily 997. Yeah, you're looking at it smaller time frame, which is good. So completed a daily Mando model. You just want to close above one of these highs. That'll make the breaker. That would be great. And then I think you go chase that 860. You have 997, which is a daily bearish imbalance. I think that's fair too. Yeah. Yep. I think that's fair. It's pretty good. Yeah, I would just want this to close above these relative equal highs. You get a close above there, I think you're good. Even on a back tap into a breaker, you would have a fair value gap or a volume imbalance to pair with it. That's pretty good. Yeah, on is definitely slow compared to the other semis, but the other semis don't look as good. But actually, on the flip side of that, you had ARM. ARM is up like 10 or 12% already this year in the first 2 trading days. You have MU, which went absolutely insane over the last couple of months. So, like, there's some that are hot. It's just like AMD, NVIDIA, they all had their runs, and like now you're starting to see like I don't even want to say the lower level semis, but the ones that are just a little less talked about or a little less big because they're all fucking big at this point. But they're starting to get a run. Where do I have ARM? And ARM setup actually was pretty good too. So it's weird. It's like the main semis don't look nearly as good, but the others look very good. Yeah, so ARM already. Oh, ARM had a really bad reversal today. Shit, I didn't even see that. Yeah, so it's $6 higher and retraced. But yeah, from the start of the year already, I mean, you're up from 109. You were at 120. So some of the semis are catching up, which is good. Love, and how do you know they do RS? Don't always show on Webull. Yeah, Webull. I don't really know too much about Webull. I just look at a trading view. Or you could always ask somebody. I'm sure somebody would look for you. Love, is that a stock? Let's see. The Love Sack? Oh, all right. Relative equal lows on the yearly, rejected out of a yearly fair value gap. I think this is probably going to go to the lows at 407 just from the yearly. Yep, I'm looking left. I don't really see. We slipped up on this bullish quarterly imbalance already. Yeah, to me, it looks like the draw is pretty clear. It's lower. I think we could reject out of here. Go target the relative equal lows at $11. This is out of the monthly. Yeah, I think this one is a bearish setup for sure. AES is a name I've been holding for a while, since before I learned how to read price from you. I'm up on it, and I was already cutting the position. Yeah, no, look, I just to be fair here, I'm not always going to be right. I'm just basically sharing my thoughts with you. I'm not trying to influence decision making or anything like that. Obviously, I'm not a financial advisor. But yeah, I just, like, that's why, like, sometimes when you guys bring them up and I just kind of say it, I don't know, like, what position you have. I just tell you how I see it. But, now that at least you might see my opinion. Maybe it was different from yours, or maybe, now at least you can kind of put together some sort of plan of action just in case, it goes wrong for you or maybe wrong for me. I don't know. But at least you kind of now have some levels and just kind of a plan of attack from your own point of view. Yes, this is the setup grading chart. Yes, very good. Yeah, I'm gonna do another video on this year too, make it much more direct. Yeah, Seeker sent that. RCAT was one that I personally wouldn't touch until those relative equal lows. Yeah, I remember reading that out of yours, Seeker. Yeah, I agree. Let's see. Webull shows splits. Nice. What made it pique my interest was it was forming the yearly imbalance and shifting structure bullish, and I'm pretty sure RCAT is also a pretty hot sector, if I'm not mistaken. This might be a guess, but package software, maybe not.
It's a sector I'm hot on. Drones.
Yeah?
Yeah.
Yeah, package software is, I guess, a loose term for that, right? Yeah, maybe. I mean, honestly, I think it might go without getting those relative equal lows, which sucks, but that's why I'm just being stingy on a lot of these names because I think we could retrace a little bit here coming up. I'm going to be a little bit more, kind of just let the names that I already have go. Geo looks like it. What is Geo's deal? I remember somebody was on this one. Put its foot in the ground a little bit here. That's good.
Finally moving. Another name I took that I thought would be 3-month hold, maybe more. It's going to be another 6 to 8 month hold,
I
probably.
know it's higher time frame. Yeah,
That's the
higher time frame,
calls,
but
not options.
true, true. Yeah, especially with the higher time frame. But you got a breaker, you got an imbalance. You didn't nullify this imbalance at all. You mitigate this, I think you're gone. I think this is a Bury name, right?
It was, but I think he dumped it.
Oh,
I can't say when, but I don't think he has it anymore.
yeah, I'm not sure. Um, yeah, I agree with you on what you said about RCAT here too. Love a couch and pillow company worth 211 million. Yeah, those shits are expensive, man. My pillow should be worth $0. That guy is so fucking annoying. I used to like him. He's so annoying. Those commercials play every 2 seconds, and I don't watch that channel anymore. But I just remember my grandma. She was the same. She was like that old lady who just like literally sat there and watched Fox News like 24/7, and even she, towards the end of her life, she was like, I can't stand that guy anymore. I can't watch his shit. All he does, every 2 seconds, he's got a new fucking commercials. She literally liked him because he wore a cross. That's just like, I guess, the thought process there. But then she got sick of him because he was annoying. Yeah, no, literally, I think everybody's kind of sick of him. He's probably a nice guy, but yeah, those a lot of commercials, a lot of sales. Shoving down your throat. An 8 ball, yeah, literally. Um, you're good. I see the same thing you're seeing on that AES. Yeah, I think it's at a pretty big pivot right now. Yeah, they did stupid money. Yeah, they're expensive. Lovesac, yeah. Geo was Seeker, that's right. I know we don't talk fundamentals here. I'm just shocked that you could sell that many pillows, couches. Yeah, well, you know what? Another thing is, I don't really talk about this though, but I think there's a lot of shit that goes on behind the scenes. Like, and I'm not to try and tinfoil hat this, but like, if you have the right connections and you get in the right index, think about it. Let's just say, I don't know if this is the case, and it might not even be the case for Lovesac, but like, if Lovesac gets into like, say, the Russell or the S&P or something like that. That means for every single time somebody buys a share of the S&P, and think about how many people have retirement accounts that are operating with the S&P in the background, like weekly DCAs or something like that. Like, Love is going to get hit by that. You know what I mean? So it's like, I think there has to be like somewhere sneaky, like, oh, I got to connect that we can get, if we put up X amount of money, we can get into the S&P, and then you kind of just chill and you kind of run on a autopilot. I know that's really like in depth, and I could be wrong on that, but I think that really is the case. I think there's a lot of shady shit that goes on behind the scenes. Yeah, he may be annoying, but to come back from being a meth addict to achieve the American dream, true, true. Nice religious man, true. Cross plus recovering addict, very nice. Yeah. Yeah, no, he's just, I don't know, it's something about his face. It's just like, dang, good on him. I respect it, but it's just like, ugh. And it keeps coming on. He like, and then there was one, I remember this was years ago. I don't know if this commercial is still active or they did a new one or what, but he would like, somebody would like open their mirror in the bathroom and then he would be there. Like, I was just like, ugh, punch the screen. It's like, fuck. Um, anyways, let's see. Corporate actions display in the chart area. Yeah, I'm sure you could turn it on. Yeah, absolutely a lot of shady shit going on. Everything's made here, which is great. And he employs Americans, not Americans, also great. Yeah, so hard to hate. Hard to hate on that. But, so yeah, like I said, I thought this was going to be a short call. We are now running on an hour and 20 minutes. Hilarious. Okay, so I think that's gonna be all now. Again, this is now the second call that I really didn't go through any of the names that I wanted to go through, which is fine. Tomorrow, while we're in the background of live trading, I will go through a bunch of my own personal names, and I will record the live trading session, just because I know I'm gonna be going through some of the individual names as well.